Yeah, Wednesday. What's up, everybody? Wednesday morning. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great Monday, a wonderful Tuesday, and now it's time for a wacky, wacky Wednesday. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, all of that fun stuff as we are about to get rolling on our upcoming week. For our new daily market commentary, which starts next week. So, new daily market commentary that starts next week is going to be focused on a little bit shorter, a little bit more impactful, and we're going to talk about our stock in the news. But one thing I want to just kind of give a quick announcement to everybody is that on Thursday, the 4th, Thursday, March 4th, we are going to have our full day Trader Summit. Register for the Trader Summit. We keep this limited to the first 1,000 people that join, but we're going to have a host of great presenters this week, next week at the summit. Myself and Corey, as well as Justin Krebs. Justin's actually going to have some really interesting things to talk about from a longer-term investing perspective. I will talk about trading around the open part of the day. Herman Casas is going to talk about the crypto markets and what does it mean to be successful in the crypto arena. Ryan Miller, he's a performance coach and a business consultant, so he's going to talk about peak performance and what does it take to be successful there. And then Lex Luthringhausen is going to talk a little bit about options and specifically volatility as how it's related to GameStop and AMC and a lot of these more highly manipulated stocks. So please register ahead of time, tradersarmy.com/trader summit, so that you can attend that session. Like I said, it's going to be limited to the first 1,000 people. So hoping to have you all come in and join us. All right. And there a lot of those are new faces, people that you aren't used to seeing, which I think is great for you to see a few more. And then we're going to have one more who's not on the list yet, who's going to join us as well, and he's going to talk futures. All right, so let's get started for today. Now, I will say today I've got a very truncated timeline. I've got my niece and nephew in town, and I've got to go say goodbye to them before they leave, and they're leaving at 7:30. So we're going to go 10 to 15 minutes today. I'm going to go very high level. We're just going to talk some of the top. So, Liz, I don't know. I don't know that Dwight has earned anything, although you might see another Dwight video coming out soon. All right. So taking a look at the ES for today. Now, yesterday we talked about the fact that we were in a verifiable downtrend and the market's shown some weakness, but it didn't change our overall big picture bias that we were just anticipating a chance to get long. And so when I look at what we did yesterday, we had a demand level down here, but we blew right through that demand level. I mean, that was a confirmation demand that we cut right through it like the proverbial knife through butter. And then reversed and started to head up. Now, we did come into a 15-minute area of supply, and that level did not hold at all. Now, once that level didn't hold, all of a sudden, that should perk your ears up, right? It perks your ears up when you get small 15-minute levels that don't hold. And so now we're right back up at that line that I said yesterday was kind of our inflection point. And if you see, we've put in a little bit of I'll call it an ugly inverted head and shoulders. Little Quasimodo shoulder over here, but an ugly inverted head and shoulders for a potential for us to get some basing and price to rally higher out of there. Technically, our trend has not changed. We're technically still in a downtrend, but forming what I would consider to be a bit of a base. So if you want to be a bit more aggressive, based on our overnight trades, I think you've got a nice little hourly wick over wick level right here. Technically should still be a confirmation entry, but I'm okay if you want to be a bit more aggressive and take the limit because it does look like a bit of a base is forming. I'm also okay with basing below here and you taking the breakout trade. And on a breakout, I think your target's about 39.18. Nasdaq, we actually did get a decent trade into the 15-minute level, but if you use our 15-minute 6-candle rule, more than likely price came in, didn't go above our stop out point up here, and then 6 candles later had gone basically nowhere, telling you, it's probably not going to do a whole lot. And it came back in a second time, and then we got a better move away, and a third time, and then a little move away, and now we've broken above it, right? So now we're sitting just below this supply area right here, which we didn't even have that supply area marked, as it's not a phenomenal area of supply, but similar thing in the Nasdaq that we have in the S&P, that we could see price rally up, and that would be our level, would be right in here. Now this one's more recently formed. If I look at that on the hourly chart, that same wick over wick on the hourly that we have in the S&P is not as clean in the Nasdaq, but we've got this teeny tiny, itsy bitsy, teeny weeny, yellow taupe polka dot bikini. I mean, teeny weeny level right here, wick over wick, that we could see a reversal. Okay? So those are my two NASDAQ and S&P markets. Like I said, I'm running a bit tight this morning. Russell, not a whole lot to talk about. The Dow breakout above the high still exists. So not a whole lot up in there. Looking at our commodities, starting first with energies and metals. So crude oil yesterday, we did have a good area that I thought was a decent zone of demand to reverse off of. And I felt like, okay, here we go. Let's do this. And I saw price coming down into it. And I set up my trade to get long. And then the market basically flipped the middle finger at me and continued to move away without giving us a solid entry. And so forming a bit of a base here. With this little area here, that was a really nice restful pullback, if you will. And so if I look at this on a 15-minute chart and say, okay, where might there be a reversal on a pullback? My eyes would first go to here, okay? However, this red candle is a bit of a retest of that area, so it makes it a bit weaker. And so this is a little too messy for me. This is the better level all the way down here. Now, that's a very big difference between all the way down there and where it was a bit messy. If you want to get very aggressive, oh, John, that finger's why it's called crude. You. I see what you did there, you. This is a bit messy up here, and this one's much cleaner and it's further away. And so the temptation is to not worry about the mess and just say, you know what, I'll give it a try up here. And I'm just not willing to do that. I'm going to be somewhere down here for the better area on somewhat of a reversal. If I slide this to the 1 hour, I mean, we're still in our upward trend. My 4 hour, I mean, we're still in our upward trend. We did talk about the fact that momentum is slowing down just a little bit. If I throw my MACD on here, it's slowing a little bit. Not too bad, though. Not too bad on our slow. Let me check my RSI real quick. Yeah, still pretty strong up in the RSI. So overall, I think that we're going to continue to look for bullish sentiment. There's really, it's not slowed down enough for me to really say anything about it. A refined Justin joke. Well, it is, and it is crude, so it is refined. So looking above 1814 on gold is still the breakout line. That's all we talked about yesterday. There wasn't a whole lot to speak of from a reversal standpoint, and you can see why, right? I mean, we did get a little move off of this area down here at 8 o'clock, but not enough for me to really worry about. Same thing for today. Still a breakout above 1814. Insofar as natural gas goes, we talked about a breakdown below nat gas. So if you took that one yesterday and you're still in the thing, you got a decent run. If you took it 1, 2, 3, 4, 5, 6 and moved your stop to break even, you technically should still be in the trade. And so it is still running down on the breakout trade in nat gas if you took that one. So the next one would be down below here, which we continue to find opportunities in these breakouts, right? They don't have to be huge moves, but you've got to be comfortable taking some of these breakouts, because if you're not comfortable taking these breakouts, you miss a lot of these parabolic moves. Speaking of which, let's look at what copper's doing. Copper's giving us an opportunity potentially again for yet another breakout. Now remember, copper broke out down here, it broke out right here, it broke out right here. but it didn't retest any of our demand levels. So we've gotten 3 opportunities, really 4 if you go all the way back further, really 4 opportunities for breakout trades, but not one demand level's been retested. Now, eventually, are these breakouts going to fail? Yes. Eventually, these breakouts are going to fail, but until they do, I'm going to keep going. And so you've got a basing area in here. You've got an opportunity for a breakout for copper to run a bit higher. All right. Let me throw this one up in the window. Take a quick look at ags, and then I'm just gonna glance at the equities or the commodity markets and currency markets. Nothing here to speak of. The bonds, we talked yesterday about the fact that this is probably going to break down. Now, my guess is nobody played this gap. Okay, my guess is nobody's playing this gap down here on this position, and rightfully so. Although we did get a very, very strong breakdown, continuation just tells me it's going to go further down. So I'm going to get rid of my demand areas below me because I'm going to trade with the trend and with momentum. And the best level is going to be the retest back to this wick over wick area here. Crude oil, the euro. We could see a break above here in the euro, so that level still very much in play in the euro. And then also in the Canadian dollar, prices could continue to come back up. I'm going to remove this one right now in the Canadian, although we did break above. And let's look at this level down here. This is the one I'm most interested in. Let me throw my volume confluence on here. Pretty close to yesterday's volume point of control. Not exactly the point of control, but pretty close to it. Still a value area for volume. All right. And then let's go see bonds and currencies numero dos. On here, we saw our wick up, wick down move, and we didn't have anything in play. And this is probably a good thing that we didn't. Remember, anytime we see this, there's some big forces at play that are causing price to move in that way. Let's see. With slightly uneven wicks on the current breakout, how do you draw your breakout line? So let me go back to HG. I'm sorry I didn't have my chat window up in front of me at the time. I'm okay with that slightly uneven wicks. I typically would go with, you might want to go with the highest wick up here if you want to be ultra conservative. I actually took the middle one right here because it's still close enough for me to consider all of it. All right. And then the last of these bonds and currencies, looking here at currency markets number 2, the Japanese yen. We did get the strong breakdown off of this level. We almost came into this zone. We were unable to do so, and then price just kapowie sold off. Levels are all still valid. The supply levels above me are all still valid. This would be probably the one that I'd be first interested in, is right in here if we get a retest, but we certainly didn't get any basing before the breakout in this one. Yeah, a bit subjective, Liz, when you don't have the exact same touch point, which is why I went for the middle one. The Australian dollar, I mean, we've got definitely an upward kind of sloping line. I'm not playing the trend line break. What I am playing, though, is if we get a little bit more basing, this could turn into a breakout. It's not as clean as that copper level or even the Great British Pound level, but this could turn into a breakout. I see this pattern happen a lot where we've got that upward trend, but it's definitely as we're sloping up, it's not, making the next higher level up here. So I think that could flatten out a bit and turn in for a breakout. All right. Well, that's all I got. Like I said, I'm running a bit tight on time today, so let me get all this information out. Once again, do me a favor if you guys would. I'm gonna throw a post out later today about the upcoming Trader Summit. If you guys wouldn't mind, just reshare that post on your social media. I think it would be super helpful. That's going to be a really cool day. Remember, when we do those, they are non-sales pitch events. We're not pitching a product. We are just there for give you as much education as we can. You don't have to be a Traders Army member. It's a totally free day. And at the end of the day, we sit around and we drink whiskey and we talk about trading and we answer questions. And so I really, really hope you guys can join us. It's going to be fun. It's going to be a good day. Those are always good days. So until tomorrow, everybody, hope you guys have a great day. If there's anything I can do, let me know. And I will talk to you soon. See ya.